Well, we had a shocking Friday. Well, we've had a shocking February with Tesla down 25%, even after it went up almost 3% on, no, over 3%, I think, on Friday. We
Mhm.
still were down 25% for the month. We're down more than that for the year. But it turns out we're also up 40% since August 28th. So over the 6 month period, we're up 40%. So a lot of movement, a lot of craziness, a lot of stuff going on, and it's all Elon's fault.
Right,
So I
right,
like I like to say it's Elon's fault that we're up 40% over the
right.
last 6 months, and it's Elon's fault that we're down 25% in February. But it's the same guy, and it has to do with politics, or does it? I've got Brian Wang here, who's usually going to straighten us out, and he'll. Brian, you say that you have all the answers, right?
Right, right. I think I have an answer theory about that. So I was able to call that we were going to make the run from August around 200 up to the peak in, January 21st, about 488. So, over 450, right?
You were the only one in the world who was anywhere close to the 450.
Right,
I was slightly behind you at 410. Okay.
right,
Yeah.
right. So I was able to make that prediction, and then it sold off. I had hopes that it wouldn't, but it did, although not surprising. And again, I tracked it back to what happened in 2019 to 2020. In 2020, we went up 10 times, but from 2019 around August as well, up until January of February of 2020, it went up four times, 15 to 60, and then it dropped more than half down to 28. So we haven't fallen more than half yet, but then it then went up, close to, six times, five times, up to a far higher, actually 10 times up to a higher number towards our equivalent of 300 now. So we're doing something similar to what happened then, in my belief, right?
I've also seen an analysis. I don't think it was AJ. I think it was somebody else who said that the last 4 years in a row we've had this fall off in the first quarter.
Right. Right. Again, the first quarter fall off is uh, auto companies have worse sales at the beginning of the year, right? You do this big push, through Christmas and the end of the year, and then you have this dip. So when you're still an auto company, you have the likelihood of a big dip in the first quarter.
But we
And there's
not
other, yeah,
but I'm saying that the stock also has fallen off,
right,
not just the numbers, not
right.
just the sales and the earnings, but rather the stock has moved with those negative, yeah, the negative numbers.
Sentiments and stuff like that. Yeah, right. So the big narrative from things one is that we're doing the transition to the new Model Y, and which pretty much needs to happen now. It's not like the Tesla had the choice of like we're not going to transition to Model Y because transitioning to the new version is needed to so they can then get ready to do the new models, right? Because it's ramping up the parts and doing new things. So there's just like Cybertruck. Oh, people say, oh, the Cybertruck, it was disappointing sales and stuff like that. There was stuff there that was needed for their future plans, right? They needed to do the 48-volt architecture. They needed to do brake by wire. They need to go to steer by wire. Actually, I think they only did one of the two. I think it was the steer by wire that they did. But there's a bunch of technological things that had to be executed upon.
Yeah, and I'm not done. I don't think we're done with Cybertruck. People are like, oh, how come they're not selling more? And I think it may be either a 4680 problem, or it may be a something in the ramp, or it may just be what would you call this? It may be a desire to sell as many at the $70,000 level as possible before you start moving down to the 60,000 level.
Right,
It seems like that's kind of been what they've been doing,
right,
is let me see how many I can sell at 120. Let me see how many I can sell at 110,
right.
et cetera. And now maybe we'll see it come down to 60,000, and then we'll really find out what the potential marketplace is. Because there's nothing from the standpoint of the consumer that's telling me that we're done with Cybertruck in terms of growing the business. Because there's a ton of consumers out there that still love the truck.
And the other thing is that a limiting factor Jordan Giesecke described how um, Tesla can get to 4680 LFP, iron LFP, instead of the nickel, going to cheaper LFP. And that they would be able to bring their costs down to, I don't know, $60 per kilowatt hour, which would take out, you know, $3,000, $5,000 out of the car. So then you can get down to a $55,000
Right, right.
Cybertruck, say late 2026, 2027, right? And then with some other technological improvements, you can get to a $50,000
Hmm, hmm,
Cybertruck, right?
hmm.
In that time. And if you made a modified version that was a slightly smaller version, a um, compact Cybertruck, right? Which and people have compact trucks, like Toyota
Sure.
does a bunch of compact trucks.
Thank you.
Those would be, super big sellers in Asia and in Europe, right?
Mhm.
You could then get to a $40,000 version 2 Cybertruck,
Right,
right? So just proceeding along that path, the fact that that can happen would be worth tens of billions of dollars to Tesla, but it'll be in the noise of the fact that they got FSD working and robo trucking working, all that kind of stuff. So, but for the Gary Blacks or other, car guys, that is something that they should consider for the 2027 in terms of the volume numbers. That hey, they can actually make one that can sell 3 million, 4 million, 5 million truck units, SUV units that from this new technology, right? It just takes a bit longer. It didn't happen right away, right?
All right, so I got you off your track.
Yes.
We're talking about we're in this period of time when I, quite frankly, I think we're in a good news time, but I think your argument is going to be that there is still a overhang of a lot of bad news. So talk to me more about how the bad news is impacting us now and what you think is going to happen.
Right. So, and not just bad news. I believe that it is uh, orchestrated attacks, in the media. 'Cause like when all the media picks up on, hey, Tesla Europe sales are down, right? But that news was known one quarter by quarter. You don't do a year-over-year drop without having bad quarter after quarter, right? So we knew that the quarters were bad in Europe for, a year. You know,
Right, right,
each quarter was bad, right? We knew that, right? And then the annual numbers, those came out like 3, 4 weeks before they made the big deal about it,
right.
right? So anyone who's following it knows, oh yeah, Europe was bad. Duh. So so then this an orchestrated media attack. And then the orchestrated media attack, oh, you're a conspiracy theory. It's like it's it is what's happening. And the funding from USAID to
Right,
put stories out into global and other media is like, here's where they cut a a $20 million check to the BBC. Here's where they cut, $20 million over to Politico. Here's where they cut a bunch. It's like we've seen the money flows. It's not like there's no evidence that this is going on. It's just more and more obvious. But what does that mean for Tesla stock? One, they're generating hate for Elon, hate for the brand. They're trying to attack the brand, right? And people can say, yeah, there is some substance to that because they are getting some people to not buy the car, right? And they also, creating negativity around all of Elon's companies,
mhm,
right?
mhm.
So and they have gotten the stock to go down, right? We've gone from that. Part of it is the the Model Y ramp, the lower production numbers. There's some substance to that, and then they're ignoring the positive news, and there is a bunch of positive news that has happened already,
Mhm. Yes.
right? But so then it goes to when does enough of the focus shift between the bad news to the actual good news and to the new, really major good news that's going to happen that should override a bunch of this stuff. So that's what my thesis is, that basically over March and definitely around April 2nd is when we reach peak bad news. So for trading, people know that you can get peak good news and peak bad news, right? And generally you want to sell on the point where the most bad news happens, right? And that's the sell on the news event. You anticipate the bad news,
Mhm.
you sell on the event, or good news. You anticipate the good news, it runs up to it, and then you sell on the event because then everyone else knows you've lost the information. Everyone has incorporated the number, the issue is fully reflected in the stock price.
Right.
So I anticipate this fully reflecting the stock price thing by April 2nd because we're anticipating a bad volume number, right? That we're only going to get 350,000, 400,000 cars versus 500,000 or 480,000, right?
You
So
would,
that,
so you would think that there would be downward pressure on the stock after the news on the second? Or you think that's the news that would be confirming
yeah,
and
it would
make,
be news of confirming the story and being the maximum the story about how bad things are for Tesla is. Because then you'll have the earnings numbers
right,
and people can project, okay, the earnings will be kind of bad, right? Based on the fact that we didn't have as many sales, right? But alternatively, again, that would be fully baked in. We're already knowing the numbers aren't going to be that good. So the fact that we're going to 350 is not a surprise to people who are in the stock, right?
mhm, mhm,
But then actually the you can surprise from lower expectations,
right,
which is, I think you also agree with that. That there's reasons why the numbers won't be as bad as the auto sales numbers because energy, there's a bunch of other stuff, efficiencies, other stuff where that number could actually those numbers could actually turn out to be good,
mhm,
right? So then if I'm trading negative on the stock, I've been writing it down, congratulating myself for staying in so long on the ride down. And then my my risk reward is maybe it goes down to 270, maybe it goes to 250. If I'm super lucky and I'm Gordon Johnson, I think it can go down to 230 or something like that, right? But the chance of it keep going down is getting less and less, and how much it goes down is less and less.
right,
And then the upside is it could do a U-turn and go back to 500,
mhm,
right? Because that's what happened before, right?
right,
And so then you have the risk of playing with, something that can blow up in your face, where it can suddenly start moving back. Because all it takes is some good news, and then the fact that you're so down means that the pop goes to like 250 or 350 in a day or 2 days.
right.
It's just like that rip your, how fast did it go up from like 220, 300 to 350 last time, right? It was
Sure.
very, very fast.
Very fast, yes. Yeah,
So
so then the good news that we might be, we have the obvious good news. We have the good news where we could be seeing some major change in FSD. We might get 14. We might get unsupervised. We might get evidence of robotaxis being or cyber cabs being produced, hundreds of them. We might actually see some test ones out in Texas being driven around on the streets before the actual launch. I mean, there's all kinds of little hints and things that we might get along the way, and those certainly, to your point, by the end of April, sometime in April, a lot of that might already be happening.
right, but you need to get out of the way before that starts dropping, because even one of them comes early, and then you in your negative, like short position, are wrecked,
You're
right?
right.
And you already have profits to grab. It's
Yeah,
like, why am I staying in here?
yeah,
I'm trying to squeeze the last bit out, and me being greedy, you know, what's it? Bulls can do well, bears can do well, and pigs get slaughtered.
right. Exactly. Yes.
So basically, them, the bulk of the money would say, okay, that's enough. Like I can always, if I think the thing's gonna be negative, I step away, it pops back up again, and I
Mhm.
can ride it back down.
Yeah.
Right? I get out here. I would be swing trading it because the people who have held long-term shorts on Tesla have always lost.
So the other thing is, of course, not the other thing, because I've got a list of 18 that I put out last week. But another really big thing is we now have a risk off market. We've got the VIX that was up as high as 21, 22 last week. It popped back down to 19 on Friday. After it was up to 21 on Friday, it dropped back down to 19. I think a lot of the uncertainty right now, a lot of the reason why we're risk off has to do with the Trump administration purposefully creating chaos and confusion. And it's not purposely doing it to ruin the stock market. It's not purposely doing it to create people, a need for the pharmaceutical companies to get rich off of anxiety medicine. It is purposeful in order to get to the result.
Right.
That this is what he did last time. It worked extremely well. That if we do the operation, if we cut now and get out the pus and get out the infection, and if we get all that done early on, then we can turn the whole thing around. And again, I would think we could probably go back historically, haven't done this. I would think that again, by the end of April, beginning of May, the confusion, the consternation might have dropped a lot, and we'd have a much better picture of how things are going to kind of start working out.
And the other thing, besides what you're saying there, which I agree with totally, is that the interest rates, which you've been following closely, are down to what, 4.2, 4.3?
4.2.
4.2, down from 4.8, 5, right? So a half, 0.7% on that. So if I owned bonds, right, I already have an 8% return, for the year on that, right? Because people don't know that yes, I can buy the bond, I would get it at 5% rate, but once it drops down to around 4, all my future cash flows get discounted, so I get this pop up. So it can be, if I had a 10-year, it's 10 times the drop, right? So getting a 0.7 to 0.8 means 10 times that, I get the 8% up, right? So it's going down because the bond market is getting credit for Doge working,
Right.
and for the bills to pass and all this kind of stuff. So March 14th, the bill could pass that cuts 4.5 trillion over 10 years and blah, blah, blah. And so then they say, okay, yeah, if the war gets solved, that would mean oil price is going to $60, $55, because Russia's selling oil again, and natural gas. And then the inflation's down, and again, more room for interest rates to go down. So it would not be inconceivable that we get to into the threes,
Oh, I think
maybe three and a half, or even to the low threes,
I
right?
think we could be looking at the threes, maybe even next week,
Right.
because we've got gasoline almost down to its the low point of the last couple of years. We're
Right.
only a couple of percentage points away. We've interest rates, the momentum is there.
Right.
And as you point out, I think it's partially due to Doge.
Mhm.
I think it's partially due to the Republicans going to, pass the bill theoretically. It looks like they'll get it done. But I think there's also a sense that the overall economy is slowing down. I had a bearish guy I watched last night. It was a very good show, but he only thought that the economy would slow from 2.4 to 1.4.
Right.
And I'm thinking, a GDP increase. And I'm thinking, man, it could easily go to 0.4.
Yeah.
But I think the bond market is saying, no, we're seeing that slowing.
Right.
The Tennessee Fed,
Mhm.
say it was the Tennessee Fed, Southeast somewhere. One of the Feds down in the Southeast said yesterday they're seeing a 0.7% decrease in the first quarter at this point.
So let's say we get down to 3.5, 3.2%,
Yes.
middle of the year.
Yeah.
What do you think the number is?
No, I think 3.75, maybe by the same period that you're talking about, which would be, the beginning sometime in April, we could be 3.75.
So then you've already got a 1.2% drop from the 5,
Right.
right? Which on a 10-year would be like 12%, 13% return,
Right.
right?
Right.
So you're a bond trader, you're super duper happy,
Yeah.
right?
Yeah.
But now you're saying, again, how much more?
Yeah.
3.5.
Oh yeah. No, no, it can keep going.
Right, keep going. But then at a certain point, you're saying I got the bulk
Yeah.
of my expectation,
Right.
right? And at the same time, stocks have been beaten down, and the tech stocks have been beaten down, right? I made, I'm not a pure bond trader. I also do stocks, right? So I've gotten my 12%, 15% return. I may have done it with leverage. Maybe got 30%, maybe got more, right? And so I maybe got even more than that. Maybe got like 40%, 3x leverage, something like that. So I'm like, I got low of the cash. I still think, okay, it's going to go down. It's going to keep going down from 3.5,
Mhm.
down to 3, but it's going to take another year,
Yeah.
right? Year and a half, right? And also there's again the question of hiccups where it pops back up,
Right. Right.
right? But now stocks are down 20%, right? Um, Tesla was down, 50%, right? So then they start saying, I'm going to take some of my bond chips off the table. I can take 20%, 30% of my bond chips off the table,
Mhm.
and I'm going to put it into beaten down stocks, right? I start shifting that. That would be like $2 trillion, right? It'd be like a big number, right? Once you make any kind of rotation out,
Mhm.
right? Because I'm not like the full thing. I'm not like, okay, bonds are over, I go to this. But once I start going from all in on that to 80% and I'm loading into the other thing, I'm transitioning over,
Mhm.
right? That also goes to something that could happen in big ways in the summer. And then again, some people get ahead of that, right? So then again, the stocks start bottoming, right? And then they start moving up. So again, that pop from 250 back to 360 for Tesla is
Yeah.
like a little bit of sentiment shift, a little bit of money shift, a little bit of big money shift, right? And then boom, you're right back to 360. So that goes to the fast, it does it in a couple of days kind of thing, right? Because all it would take would be, I don't know, like $20 billion, $30 billion. It'd be not a huge amount
Mhm.
of the $900 million valuation to get that move up. So
Yeah.
that again goes to peak negativity and some shifts around policy stuff and market dynamics that get us, really moving back.
And there's two other things that happen when the bonds go down. So, well, three. There's three other things that happen when the bonds go down. So you get interest rates, in particular, the large purchase interest rates. So if the 10-year goes down, all of a sudden mortgage rates go down and car loan rates go down and large personal loans go down and corporate loans, business loans, all those go down. So as those drop 100 basis points or 150 basis points, all of a sudden you're going to sell more cars, you're going to start building more houses, you're
Right.
going to sell more houses. Grandma might even move out of her house finally
Yeah.
because she's not, if she can get a 4% loan, she might be willing to give up that 2.5% loan she's sitting on in order to get a smaller house or a house in a better location. But she's not going to continue to sit on that house forever as those interest rates get closer and closer to the one that she's sitting on now. So more cars, more houses on the market, more houses selling. That when houses sell, people don't think about this. 10% of the entire business of the United States is housing.
Right.
But another 10% is these things that are tangential to that sale.
Yeah.
So when the house sells, there's a real estate agent that makes money. There's a mortgage person that makes money. There's a bank that makes money. And then there's Home Depot that makes money and the yard man that makes money. And all these other people make money when that house gets sold, whether it's a new home or a used home.
Right.
People come in and they redecorate that home that they just bought. So you get that 10% of the market moving in the right direction again, which it hasn't moved for 3 years. You get um, uh, uh, automobile sales really pent up right now, pent up demand for automobile sales. You get that moving again. Well, now you've got the two out of and then durables.
Mhm.
And what happens when you sell more durables and more houses? Oh, the trucking industry gets going again because those are things that you move. So the services industry, which has been way up here for the last 3 years,
Mhm.
while the Adams business has been terrible, well, you don't get as much trucking. So the trucking industry has been in recession for 3 years. So you get those three industries that have all been in recession for the last 3 years. You get all three of those moving in the right direction. Your economy's on fire.
Right. And how close are we to that? At the 4.2, the mortgage rates are like just over six, right?
Six,
We,
6.6, 6.7 right now. Yeah.
right, right. I mean, maybe if you get certain mortgages, I think
Oh,
some
yeah.
might be down
Yeah.
to a
You
bit
can
lower.
work them down to under 5. Yeah. I mean,
Right.
under 6. Yes. Yes.
To a low six. Yeah. So there are companies that offer low six. Yeah. On average, you shop around, you
Right.
can get that.
Well, yeah,
So,
you might have to, you might have to buy it down.
right, right. So then it drops to the 3.7, which we say, like
Right.
maybe weeks away, right? Then you can get to a sub six and you get to 5.7, right? And then there can be compression on the gap, right? Like we had a high gap between the 10-year and the mortgage rate. So
Right.
you can get to a 1% gap,
Right.
right? It's not inconceivable that could happen. If you did that on a 3.75, 3.5, then you're in the, sub five. You can get to 4.75,
Right.
4.5.
Right.
And that would be a really good thing. And that can conceivably happen this year, right?
Right.
And then on the auto loan side, we're already dropping from 8, 9, heading towards 7.
Mhm.
This other move happens, another percent off, we can get down to 6,
Yep.
right? Sub 6.
Yep.
If you get to a 6, that should add like, 10%, 15% more sales to Tesla. It also can improve margins because right
Yes.
now Tesla's offering, has offered interest rate discount buy downs, which squeezes their margin. If the overall interest rates come down, the lower rates are there without the margin hit, right? So then their margins go up, their sales go up, and again, it's all a better thing, which goes to Elon saying, hey, we can have, 2.5, 2.4 million sales, not with new models and everything, just from the fact that interest rates are down, the economy thing being better, people wanting to buy more cars. You can just, from a bad economy to a good economy,
Right.
you can get a big leap in cars.
Then the other thing that happens when interest rates goes down is that the stock goes up automatically
Right.
because of the discounting your future earnings situation. So
Right.
if you have a high interest rate, then the discount is high.
Mhm.
And so your stock has to be lower.
Right.
As your interest rate goes down, then the discount number that you use for evaluating that present value,
Yep.
that drops, goes up. Anyway, whichever way it goes, it
Yep.
causes the stock to go up
Right.
automatically. The present value of the stock becomes higher. So that also, so all those things would contribute. And if you get the economy, moving on. Oh, and of course, if you get the atoms flowing better again, and by atoms I mean housing, automobile, durables, etc. If you get all the atoms moving better again, then the services automatically do better again because all those companies and all those people that are needing to push paper around more, the services are coming in to help those. Oh, we should also add in the productivity.
Mhm. Right.
So you and I both been watching some videos over the last few days of the guys who are at the bleeding edge of AI,
Mhm.
and they are starting. I've been thinking that the productivity numbers from AI should have started hitting the overall productivity numbers like last year. But these guys are now saying, you know what? We think that we're seeing it now. They're literally seeing it in corporate America. They're seeing corporations that are saying to Salesforce, no, we're thinking that we're not going to renew that $3 million contract with you. We think we can do it in-house.
Right.
Yeah.
Right. So I'm in Silicon Valley, and I know that there was a lot of experimentation the last year where, companies would spend, collectively, $5 million, $10 million, where each division, something would do, some 10-person thing, and they would learn how to use it. It could get some value, but they didn't work it into their processes, right? So now they figured that out, how to get them into the processes, and they're scaling up their pilot programs. Thus, it translates into actual productivity gains, right? Because you had to figure out how to do it. the product had to get better, and then boom, you're starting to get the gains. And then once you've already figured out, then the next version, I'm getting more and more benefit out of, and then the productivity thing really starts, hockey sticking up. So it's how it takes time for people to, like us, figure out how do I use, Grok 2, Grok 3,
Yeah.
Perplexity.
Yeah.
I'm experimenting, and now I'm getting more and more value out of it, right? And things are it got better, and I figured out how to use it better.
Hmm.
You know,
Hmm.
so I think people who experiment on it need to. If you're not experimenting on it, you need to. You need
Yeah,
to.
I was going to say, I was talking to my son. My son is marketing for a large company in Silicon Valley, and well, not a very actually it's a startup. He was with a large company. Now he's with a startup. Anyway, but he's talking about in terms of his marketing that Grok, not just Grok, but the various large language models, dramatically increasing the amount of content that he can produce, the way that he can get it, loaded up and ready to go for emails or for blogs or for whatever, for, any kind of thing where the content now has to be loaded. Just the loading aspect of it, the sifting of the lists that they're sending it to, all that stuff is faster, making his productivity dramatically higher. We had Brad Ferguson the other night saying that they're seeing in his little company, they're seeing dramatic increases in productivity from AI.
Right, right. And the AI improvements are going to continue. People who talk about the uh, hitting a wall on scaling and that stuff. One, there's multiple ways to scale, and then two, the data center that xAI and Tesla are making are going to be already 2.5 times bigger than the one they used, 2 months ago.
Right.
And then in another 3 months, it's going to be another 6 times better, bigger and better. And then by the end of the year, it's going to be 20 times bigger and better. So this means more chips, better chips, all that kind of stuff. We've covered that in more detail in other videos. But basically, million chips, B200 NVIDIA's or Dojo 2 chips by the end of the year. And so there'll be substantial new models from xAI, more from FSD, also the other models from other companies. There's still a lot more competition, all that kind of stuff. So the AI is making progress in leaps and bounds and will for several years.
Yeah.
So that also will improve the economy. That you're going to have this productivity gain boost. For people who haven't lived through it, in the internet days, the 1996 to 2000, right? The economy was growing at 5% a year, right? And that living in that kind of economy is like the 5% versus 2.5% versus recession feels kind of the same thing. Recession versus normal, normal versus fast growth,
Right. Right.
right? That's the kind of like you can feel it in a recession, you can feel it at normal, and you can feel it at faster than normal.
Right.
So going to faster than normal is you get a boom. If you can maintain it that time for like 5, 6, 7 years, here it could be 10, it could be 20 years of that, right? Maybe it goes on, keeps going, right? So, but at least a 5, 10 year kind of a boom,
Yeah,
right?
I would, when you add in AI, I mean, AI is one thing, and as you're pointing out, AI is going to keep getting better, but it's going to be the apps, the agents, et cetera, that are going to fall off of that, that it's going to be, what's really going to happen. But then if you add in the robots, whether it's robotic cars or humanoids or actually, as some people have pointed out, everything that moves
Yeah,
is going to have an AI chip in it to turn it into a robot. So those productivity increases are just, I mean, these are, as Elon says, it may change economics.
right.
We're not talking about just making things better, making things cheaper, bringing everybody out of the poverty level in the world.
Mhm.
We're talking about changing economics to where Okay, I'm going to tell this story one more time. Maybe I will tell it more often in the future, but I did this study years ago, and it's absolutely true. I believe with all my heart, and nobody talks about it. So this is the Randy Kirk theory, but someday they'll name it after me, I think. In the 50s and 60s, we spent about 10% of our money on food. We spent about 4% of our money on clothing. Now, you might say right now with food prices high, you might go, oh, well, I'm spending 10% now. No, you're not. Go ahead, check your budget. You're probably spending about 4% of your money on food, and you're spending about 1.5% of your money on clothing. Well, if you eliminate 5, 6, 7, 8, 9% of what you're spending in your budget, you don't just save that. Nobody does, right? You know what people did with that money? They bid up housing. Okay. They took that money that they were spending on clothing and on food, and they're spending it now on housing. It used to be that a bank wouldn't even loan you. First of all, it was a 20-year loan, not a 30-year loan. And they wouldn't loan you over about 25% of your paycheck. Now you can borrow up to like 40% of your paycheck. Why is that? Oh, because you can afford to spend 40% of your paycheck on housing. All right. So in the new age that we're going to be coming into, maybe your food is going to drop down to 2% and your clothing is going to be at 0.75%. And your other necessities or your electricity bill and your phone bill and your internet bill and everything else are going to be half or a third of what they are today. And you're not going to save the money this time either. So what are you going to spend it on? That's going to be the key. Is it going to be a bigger house, or is everybody just going to bid up the existing housing stock? Or is it going to be more people fighting over those vacation spots? There's only so many people that can go to Venice, every year. There's only so many people, whether that's Venice, California or Venice, Italy. There's only so many people that can go to, the beach at Santa Monica. There's a limit to how many people can fit. Okay. And if you know anything about what's happening right now with vacation spots around the world, Venice is limiting the number of people that can come into Venice. They're saying, nope, no more today. Bourbon Street is thinking about charging $1 for each person to just come onto the street because they got to have some way to limit it. It's just too crazy. Well, guess what? Just think about how that would be if it's double the number of people that can afford that trip.
Right.
So there's going to be other things that people are going to be spending that extra money on and bidding up the prices on all those kinds of things. So that's the Randy Kirk theory. We'll see if Randy's right.
So I agree that that can happen. The other thing to spend money on would be that a bunch of assets that we're depreciating can become money printing.
Yeah,
So a car versus a robo-taxi, the robo-taxi can make you money. It's like a vending machine,
yeah,
right? The bot is not just, a toy. It is something that can, work and make you money, right? So if you still wanted more money, then you would say, okay, instead of an expensive vacation, I could buy a robo-taxi and have it make money, replace my job, right?
right.
I go, oh, I lost my job. If you have a bunch of money-making assets, right, then it's like I have a bunch of rental properties. The guy who has 20 rental properties does not have a regular job.
Right.
He has 20 rental properties. So that's something that can happen. For going back to Tesla, though, is that what else can happen over the rest of this year is substantially proving out the AI story for Tesla. And that AI story is basically ground zero for this insane change because they have XAI, the best AI,
Mhm.
and they'll get that's Grok 3. They'll have a Grok Video, a Grok 4, and a Grok 5, both released possibly within 12 to 15 months, both released. And that second version could be like substantially far, far better because of the scaling that we're talking about. And then they also will have FSD approved in Europe, approved in China. They already got approved in China. And then they can have the Europe one, they say could be dropping any week, day now. And then go anywhere in the world. And then the improvements to um, unsupervised in June,
Right.
right? So the turn, like I said, April in terms of max negativity, June have several FSD related it's in Europe. The China sales start coming out. The China sales, um, they've gone from autopilot highway only to FSD streets and highways. So, and it's self-parking and a self summon. So they have the best version, and they could have all the sales the US had, or even double, um, over the next few months. Say through the year. That would be 400,000 to a million FSD sales and subscriptions, which could be in the range of $1 to $2 billion per quarter, right? That would be a
Profit.
huge, maybe that fully realized in Q2
Right,
or Q3, right?
right.
Maybe Q3, right? But that would be suddenly the ChatGPT moment. It wasn't just the AI got better for ChatGPT, it's that the money and the profits started flowing,
Right.
right? So the profit spigot starts really opening up around Q2, Q3, right? Because you'll have China sales, some other Asia sales, Europe sales of FSD,
Mhm.
and the quality is there because suddenly now they get the good version, right? Um, and then Tesla bot, Figure AI says they're going to release their Figure bot to the home by the end of this year in prototype form, right? Tesla's talking about doing 10,000. So if AI is getting a lot better, a lot faster, the humanoid bot AI could all surprise on the upside. And it could
Very
again also happen Q3, Q2. The shocking wow, it's doing that stuff. Like Figure
Mhm.
showing it sorting some, grocery bags and that kind of stuff, or being able to identify fruit and two bots being able to work together. The utility that Tesla's showing in the factory and not totally shown yet,
Right,
right? But showing hundreds of bots
right.
doing some
Multiple.
major functions, um, that could one improve their margins, 1%, 2%. That would be huge. And then productivity can go up 1, 2%. And then just showing that that's starting to happen. And then again, showing the videos where it's like where the market realizes, oh, that's happening. That happening being the 100x value
Right.
is starting to go, right? So Robotaxi 10x value, um, Tesla bots, 100x value of like, we will have a million Tesla bots in 2027, right?
Right.
We'll have 100,000 in early 2020, on the run rate of 100,000 in early 2026. And having 10,000, 20,000 bots means you can do whole factory automation, right? So, so these take a couple years to play out.
Mhm.
And at the end of it, I would say stock is up 10 times or more. But as it's playing out, as they realize, oh, this is happening, then you get the 2x, 3x jump.
Sure, sure.
Because once enough um, major funds say, yeah, the Robotaxi story, total, you're driving around, you got 10,000, you're, 10 times, 100 times bigger than Waymo, you're pulling in all the funds, you're
Mhm.
going to blow out Uber, right? If you get to a million vehicles next year, you've totally crushed Uber. That the speed with which that could happen is insane. It would be a lot of money, and your margins go from 20%, 25% to 40%, 50%, 60%, right? That margin blowout, where it's like going from, um, you know, um, regular cell phones to iPhone with services,
Yeah.
right? That kind of like gap, or going from Amazon e-commerce to cloud revenue and margins and growth, right? That shift, you only have to have it for the first 2, 3 quarters
Mhm.
to
Mhm.
show. And by the way, we doubled profits,
Right.
right? And we're going to guide to another double,
Right.
right? You have that quarter, and then and the market says, okay, you're 3 times more, 4 times more. Boom. You know, once they show the numbers, show the growth, and then guide, that's game over. So
All right. So I know that nobody out there thinks that either Brian Wang or Randy Kirk are optimistic about the future of Tesla.
Mhm.
We've never been accused of being bulls or anything,
Yeah.
but quite frankly, it could be a little shaky for the next month or so.
Yep.
Might be some ups, might be some downs. We could test 220, we could test 230. Hey, we could test 185. I don't think we will. I don't think we'll test 220. In fact, I'd even be surprised if we test the 250, but we could.
Hmm.
I also believe heart and soul that we will be 700 plus plus by the end of the year. And Brian, I think, has a similar number, even though he's at 1,500. I think he would agree that if we don't have robotaxis, if for any reason they don't get deployed,
Right.
or for any reason they hold back on showing us anything about Optimus, that
Yeah.
we can't really get to 1,500 without those two things.
Well, it's those two things. Yeah. It's basically we're then in the 700, 600 scenarios,
Yeah,
right? Where the other stuff we talked about
right.
should happen. And then if you had like a bad market where, okay, we've gone into recession, we've cut, $1 trillion out, which we need to do of the
Right.
spending,
Right.
that, or whatever it is, that if the good news gets delayed,
Yeah.
then,
Yeah.
in a 20% down market, we could be at, like 500,
Yeah.
and so those scenarios are possible because we're talking about um, month related, a 6 month delay on things can't happen. It's
Sure.
just, yeah. So not inconceivable. I have reasons why I believe it won't be that because they've been hitting things precisely on the tech development side, and the tech development side would then override, you know, okay, the bad stuff happens, the tech stuff happens, and then instead of 1,500 because we got the market down, then instead of 1,500 we hit to 900,
Right.
right? Or only some of the tech stuff happens, the market's bad, macro's bad, and then so we macro only bad, we're at um some low number, but then some level of other stuff. So we have net leaning more positive scenarios on that. But yeah, worst cases can't happen. Yeah.
Yes, definitely. We could, there are swans, black and white.
Right.
All right, Brian, I think
Yeah.
we've covered it.
Yeah.
Hopefully, you guys might have questions. Go ahead, put them in the comments below. Maybe you have comments. Maybe you think we're really stupid. Maybe you think that we're way off. I know there's at least two of you that do, because
Mm.
you're always telling me so in the comments. But, and sometimes, by the way, I have missed. I know somebody mentioned that the other day that I'm not always right.
Mhm.
Well, if I was always right, I guess I would have, a few mansions around
Yeah.
the world, and I'd be putting my feet up in Hawaii more often. But yeah, no, I'm not always right. Even Brian's not always right.
Right.
And so yeah, you can't don't make your purchasing decisions based on what we say. Just add it in to the extent that you think either one of us have a brain in our head, or some of the things that we say sound right. Just add it into your overall thinking. I'm sure that's what you do anyway, because you're smart. But anyway, let us know in the comments below what you think. Brian, thank you as always for jumping on.
Thank,
And to
thank
all of
you.
you out, and to all of you out there, it's been great talking to you.